It's not that difficult to convince Asian investors to buy gold. India is the world's #1 importer of the precious metal, and China has now taken the #2 spot, although gold has long been a way to hold on to wealth. Now, with volatile stock markets and rising inflation, gold has a fresh appeal across the region. Martin Henneke manages private clients at Taish.
Gold really represents a hedge against inflation and the market uncertainty. So definitely every investor should hold some part of their assets in precious metals just for security and not for speculation.
Gold prices are sitting near a record high and approaching $1,000 an ounce for the first time ever. The precious metal has traditionally been a hedge against inflation. A weakening U.S. dollar has sparked fresh demand for gold, with professional funds seeking further exposure. Many expect gold will continue soaring, boosting expectations of glittering returns.
Gold today is still very cheap at current prices, and we think it is reasonable value until 10,000 per ounce.
Rather than focusing on jewelry, Asian investors are now seeking exposure to gold by other means. One is by investing in gold mining companies, the other by buying gold bars and gold coins. Tara Joseph Hoy reports.
Precious metals, really, though, that's been what defined the trend. Ag, too. But gold really has been glittering. Let's talk to Frank Holmes, CEO and Chief Investment Officer with U.S. Global Investors, five-star fund manager rated by Morningstar. Frank, good morning to you. So all that gold truly has been glittering as of late, a safe haven, inflation hedge, whatever it is. I know that you had correctly called the little pullback that we had earlier in the fall. What are you doing now?
Well, I think we have a good cash position, and using our models we look at, there's an opportunity here for another correction. The gold stocks are actually lagging the percentage change in bullion for the past 90 calendar days. And historically, you get a correction with that. And I think on these corrections, you want to be adding to your positions as a gold fund manager.
So, and you say there's two choices that you have as an investor. I mean, you could buy gold futures, but in terms of getting into funds here, you want to add, you could do it through ETFs or through mutual funds. What's the right way?
Well, I think the first way is to own some 5% should be into bullion ETF and jewelry. Gold jewelry is appreciated wonderfully in the past 5 years, and you can buy gold coins. The big leverage are silver coins. Silver has a 2-to-1 leverage on the silver stocks to gold, so if you're looking for that end of it. And then the other 5% should be gold equities. So overall 10% weighting in these particular asset class and rebalancing. What we find really interesting as you're putting up is that the money flows into the gold ETF is much faster than most gold funds, even though most gold funds are outperforming the gold ETFs. The gold equity ETFs. Mm-hmm. And that's interesting because it used to only be 4- and 5-star funds that attracted most of the assets. And now it's people want to trade. And even if they have inferior performance, there's this excitement of trading it.
Isn't that concerning, though? I mean, you've got exchange-traded funds holding more gold than governments around the world. That sounds like a bubble.
Well, no, not yet, because actually it's the wisdom of crowds, Aaron. A wonderful book written that people around the world are actually believing you should have gold as an asset class. It was difficult to buy, and I think that's going to continue to grow as you see more pension funds and individual people saying, I want to have some exposure, and it was difficult to own 5% of your overall portfolio in gold before.
Frank, thank you.
The analyst from Sprott Asset Management on the show, giving you investors advice on the gold sector.
I think the gold market's primary feature is the fact that there is a massive global currency debasement going on as a result of the financial difficulties in the United States. And gold being a tangible monetary hard asset, demand is being created for gold as a result of this. And it's just in its early stages, because what's been going on is that the United States has been, as you know, has been running these huge current account deficits. And these billions, tens of billions of dollars are flooding out into the world. And they would normally lead to a sharp drop in the U.S. dollar, but foreign governments don't want that to happen because it would change their trade relationships. So consequently, they're printing money domestically to buy up U.S. dollars, and consequently, they're inflating their own system. And it's creating a worldwide phenomenon, which I've never seen growth in monetary aggregates across the world like this, and people are becoming uncomfortable because they know it's going to lead to inflation, and they're buying gold.
Buying gold during the festive season.
मैम आप ज्वेलरी इन्वेस्टमेंट के लिए ले रही हैं या अपने पहनने के लिए आप यूज करना चाहते हैं?
But this year, instead of buying jewelry, she is buying gold coins. Her logic is simple.
I want to invest in gold. If I buy gold jewelry, I'll have to pay lots of making charges. So I have decided to go for gold coins and biscuits.
Analysts say most Indians prefer to buy gold in the form of jewelry. Of the 800 tons that India consumes annually, 600 tons is made into jewelry. But if you are looking at gold in terms of an investment, jewelry isn't the best way to go.
People who want to invest very small sums of money, we're talking of few thousand rupees, they would typically like to invest in a gold ETF. But anybody who's looking at a slightly larger investment in the range of 1 lakh and above should really look at taking gold bars from the commodity exchanges.
Invest in gold.